At Academy Securities. Great timing, geopolitical mind, a trader mind. Peter, great to see you, sir.
Great to see you as well, Oliver.
Like you down at the exchange site, too. So we're holding the line here. How encouraging do you think this session is if we can keep the market up into the close?
Honestly, no idea. And I think you almost have to go back to thinking back during the great financial crisis, how we traded. So all the stuff we're talking about, lows, technicals, yeah, that makes some sense. People are a little bit excited, think there is a decent chance we get some sort of announcement either about Ukraine, maybe Trump says some other things that we like. I think this, it's not really a State of the Union, but the equivalent of such is hugely important. People are expecting him to try and turn markets around. I think he's actually going to disappoint. I think there's a small chance that we get some good news coming out of tonight. I think there's a real chance that we see a lot of rhetoric that the market doesn't like, and we give up all these gains overnight and we head into an ugly morning tomorrow. But it really does depend on him, and that's why it reminds me so much of the GFC when you had to listen to what Congress was doing or what certain politicians were doing. We haven't had an event like this in a while. That's exactly where we are. Okay. In my opinion.
Okay, so I guess I'll offer some degree of counterpoint, which is that the tariffs. I mean, this is the tariff man, right? He campaigns on this. We knew it was part of the plan. Obviously, the amount is big and the effort is expansive. But should it not be to some degree priced in? Do we have to be careful about overlapping tariff causality with maybe just an AI bubble that needed to deflate a little bit? Maybe a crypto market that needed to lose a couple bill off the top, maybe a trill?
I definitely think there was valuation issues, and that's why I think a lot of this wasn't hitting IG, like investment grade credit, until recently. It's only been in the last little bit where I think this is turning from a valuation story to a potentially recession story. And the markets all talked about tariffs. I think they thought they were going to get away without deep tariffs. When he gave the first breaks to Canada and Mexico, okay, they were working on fentanyl. Hey, they still seem to be working on fentanyl. All of a sudden, you've seen that real change. Everyone I talk to seems to think today you get some relief on tariffs. Either, again, he announces that Canada and Mexico are close, everyone's coming to their knees, everything's going to be okay. I suspect we're actually going to realize that Trump is firmly basing, some of the deficit issues by getting more tariff revenue. I think he likes bringing back jobs to America. My view is that he's really switching his, what he wants his legacy to be is recreating a middle class, recreating manufacturing, and to some extent, there is no S&P put if he cares about that. So I think he's going to push further, and markets are a little bit, optimistic, thinking maybe he's rewriting the script to offset some of the down damage. I think he doubles down tonight.
You're walking right into one of my favorite topics right now, which is the subject of intentional stock market crashing, perhaps, that the characteristic of Trump 1.0, which was kind of all about measuring his success by the stock market, that perhaps this time around the populist bent will be more the driving force. This is something that Jem Carson has talked with us about. It's not the Oliver Rennick theory, but there's an idea out there that's pretty compelling that it is kind of the populist move to maybe solve the inflation problem by hitting risk assets that are mostly held by the wealthy.
I'm going to take a step back from that, and
tell me what
I'm looking at it that he really wants his legacy to be that when he's done in 4 years, there is a manufacturing base and a proper middle class here. That, I think, is his goal. So it's not just about inflation or anything short term. He really wants to be, I think, remembered as the president who brought manufacturing back to the U.S., who gave the middle class a real opportunity. And I think for that, there is going to be a lot of short-term pain. Now, whether there's more short-term pain than we can deal with, I don't know. I don't like the fact that he's picking fights with everyone. I think it's going to make it harder to come that. But if you look at almost every single thing he does and look at through that lens, I actually think it fits better than any other narrative.
Okay. So then what are the key words tonight you're listening for? What then will determine if it's market negative?
I think if we get some deals that he can talk about deals, or that he's really, open to just bringing people to the table, and that he felt the need to do this, I think if he goes on and says, hey, we've already brought, Taiwan Semiconductor to the table, we are bringing auto manufacturers to the table, this is working, and he really starts pounding the table that tariffs are the way to go, that this is the best technique, that it will drive people to doing what we want them to do, that is when I think the markets get really scared. And I can see him saying that. I don't think he necessarily has to say that, but that's why I'm nervous. So I'm kind of resetting some shorts into this rally today. So I took a bunch of shorts off yesterday, earlier today. Now I want to be short setting up for tonight.
All right. Okay, then short, broad market stuff, anything in particular? Should you still try and go for the areas that are frothiest valuation-wise, or are you thinking like it's time to go for the kind of recession style, like cyclical, really, like today and yesterday, banks finally got hit, for example?
Yeah, so I still, I think, prefer my shorts to be in the NASDAQ 100. I still think there's the froth there. There's so many leverage ETFs. It plays both ways. It's very volatile. I think it's very affected by everything Trump's doing. So that's where I've been keeping my shorts. I continue to like FXI and KWeb. I've been trading those from the long side.
Yep, you're all over the China
I'm starting
bid.
to look at, yeah, so I'm starting now to look maybe at value. Maybe, I think quality, I almost like junk type stocks here better than, quality stocks. I do think that has been, quality has been so outperforming, but I do want to own things that no one else likes right now. I think you really want to be overweight, and the one thing we've been trying to say at Academy Securities is we think that there is an element of anything that's good for national security equals national production. So as we focus on national security, you want national production. So I think, again, some of these chips, I still like the more domestic names. Again, Taiwan Semiconductor, I think, threw a little bit of a wrench into some of those names as they're building here, but that's the opportunity. I think some of the commodity plays will do very well. Even with commodity prices coming down, the build out of our own resources, both extracting them and refining them, that's going to be key. So that's where I put my longs, and I'm still kind of sticking most of my shorts into the NASDAQ 100 right now.
Got it. Okay, Peter, you've got a couple charts here I want to make sure we hit on economics. I think everyone knows the GDP Now outlook from Atlanta Fed went south in a hurry. You've got a credit card chart that shows that the debt levels are getting pretty onerous there. Are we able to... Are these moves that we can turn around? I mean, this Atlanta Fed just fell off the chart.
So I think the Atlanta Fed I'm less concerned about because it really was, I think, people front-running trade. My concern, though, with all these things is it lasts 2, 3, 4 months. Does it shift, behavior more permanently? And what we're trying to look at, I think, is when we're looking at the consumer, there's the lower, level of consumer. They're the ones hit most hard by the credit card. I think that's going to be problematic from a populist standpoint. I don't think that affects sales. I think the well-off are still doing pretty well. To me, it's that middle class that's starting to struggle a little bit. I think they're showing up in auto delinquencies. That's, to me, more a middle market type thing. I think you're starting to see some issues in the housing market in areas like Florida, maybe even Texas, certainly Washington, D.C. area with what's going on. And I think that hits that middle class. So I think this market was already, the economy was fragile, and it's getting more fragile. And I think whatever happens with Trump's policies, if he sticks to them, even if it winds up winning down the road, we have some bumps to go through. So that's why I think stocks and the economy struggle in the next 2 to 3 months, unless he says something surprising me today, which would be nice, but I'm not expecting it.
Well, that's the other then question I have is not to keep kind of framing it this way, but if the stock market comes off, and we've heard the president promise rate cuts, but as of 3 weeks ago, the market was saying we may not even get any rate cuts because we were at all-time highs in stocks, huge crypto asset prices, pretty stable situation economically. All of a sudden, we start throwing tariffs around, stock market sinks. Is that a roundabout way to get those cuts that he wants?
Maybe it is. I do think they've been right to focus more on the 10-year. I do think my base case now is we're going to get 3 to 4 cuts this year, starting as early as May. But that's mostly that I think the state of the economy was already weaker than people thought, and it's going to be very difficult for jobs to get replaced. All this tariff uncertainty is going to slow hiring, right? How do you make decisions on your business if you're not sure what things are going to look like a month, 2 months down the road? So I think we're going to see an economic slowdown, drag jobs down. That's what's going to cause the Fed cuts, and I don't think it's going to do as much for the markets. And on the Treasury side, it's been neat that we're focused on the 10-year. One of the other things that pushed yields higher today was Germany announced they were going to potentially issue 500 billion euros to buy military equipment, domestic, right? So if you start seeing Europe turn on the spigot and issue a lot of debt, that's going to put pressure on our own yields. And what does strike me as somewhat scary is this time, right, tariffs talks has actually caused the dollar to go down. We will find out, I think, in the coming days and weeks, especially if we keep pushing these foreign countries kind of against us. Do they stop buying treasuries? Do they sell treasuries? What happens to yield? So I'm less convinced that we're going to be successful in the 10-year treasury yield, even if we get some rate cuts at the front end.
I love that. I wish we had more time, but a lot of stuff you're talking about, we are going to have to assess with time because I love the way you play chess, thinking a lot of spaces and moves ahead, especially when it comes to the policy side. So a great addition to our conversation. Thanks a lot, Peter.